Hello, and welcome to an overview of asset accounting lean implementation. Let me say at the outset that asset accounting is one of the more complex areas within SAP financial accounting, and you need to have a pretty good understanding of how it works before attempting configuration. So let's get started with an overview. As you can see, I'm in IMG here, transaction SPRO. Now, if we go to financial accounting here, and then we go to asset accounting. And then the first item on the menu is asset accounting lean implementation. Now, this is a method that SAP have made available for configuring asset accounting in a new company code. It does presuppose that you have asset accounting in operation somewhere in the system, because there are some settings that are not shown within the asset accounting lean implementation menu. However, it does cover all of the steps necessary to roll asset accounting out to a new company code. As you can see, we have four main areas here: organizational structures, special valuation, asset data transfer, and then the last one, preparing for production startup. Okay, so let's open up the first menu. And the first item on that is copy reference chart of depreciation and depreciation areas. Now, within SAP, there are charts of depreciation for all the major countries. Chart of depreciation is the top level, and within that you have depreciation areas, which are basically different methods of calculating depreciation. You can have multiple methods within any given chart of depreciation. So in this step, you actually copy either from the reference, or you can copy from another chart of depreciation that you have in use, perhaps in another company code. Now, I'm not going to go through all of the individual steps and demonstrate each one, because this is an overview. In the full asset accounting configuration tutorial, I'll be going through all of the steps necessary, demonstrating how to make the settings, and then posting transactions based on those settings, just to show you what the end result looks like. So copy reference chart of depreciation. If you fire that up. Okay, the first item, copy. Okay, we now have the option to copy here from a chart of depreciation, which we can select from the drop-down menu here. And then we give it a value, whatever we want to call it. I usually give it the same value as the company code that I'm going to use it in, but you can give it whatever value you want. Go back out, you then give it a description. You find what you've just copied, give it a description. It'll default to the description of the source chart of depreciation. And then here you have an option to copy or delete depreciation areas, because you get all of the depreciation areas that came with the copy. Usually the depreciation areas that SAP provide per country are sufficient, but you can add or delete as required. Okay, once you've done that, you then need to assign your new chart of depreciation to your company code, and you do that simply in this step here. So you find your company code, and then you enter the chart of depreciation here. Okay, now we have depreciation areas in here, and we have this step here, specify allowed depreciation types for depreciation areas. So here we specify depreciation areas for various types of calculation. Ordinary depreciation, special depreciation, which could be for tax purposes, unplanned, as the name suggests. Transfer of reserves, that refers to how you treat gains on asset disposal. In some countries you're allowed use any gain as a reduction of the cost of a replacement asset, for instance. Here, if you calculate interest, notional interest on the value of your assets. Investment support refers to where governments or states provide grants or incentives for companies to invest in fixed assets. and then areas for revaluation, where you want to revalue your assets. So I'll just look at one of them here. And this is in the depreciation area that I have, sorry, a chart of depreciation that I have set up. And here you just tick what type of depreciation is allowed in what depreciation area. As you see, I have quite a number here, all for different reasons. Okay, if we go back out of there. Okay. So now the next step, we define how the depreciation areas post to the general ledger. If they do post, they don't have to. Some will, some won't. Okay, so here you have the same depreciation areas we saw earlier. You have whether they're real or derived, and you have options then as to how you want them to actually post. So as you can see, you have 0 to 6 different rules depending on what your depreciation area is intended for. You also can post to the leading ledger or non-leading ledgers. Again, you might want to do that to prepare tax accounts in a particular country, whereas your leading ledger would be for the corporation as a whole worldwide. Okay. Again, as you can see, this is quite a complex area and requires quite a lot of thought and preparation to get it absolutely right. Okay, so that's depreciation areas. The next item here is the asset classes. So assets are grouped into classes, and an asset class might be, for instance, buildings, motor vehicles, similar type assets where you can apply the same rules to each asset within that class so that you don't have to set up each asset from scratch. Okay, so we'll go to the first item here. You can generate the asset classes from the GL accounts that are assigned to those asset classes on a one-for-one basis, and a lot of people actually do that, and that's what you do in this step here. You don't have to do it. You can create an asset class with any value you want, but this is the wizard for doing it. So this wizard takes you through the various steps required to set up the asset classes based on GL accounts. Again, I'm not going to do that, but you give it your chart of accounts here, you give it your chart of depreciation, you give it the GL accounts that you're going to use in the balance sheet for the assets. So you'll have already created your balance sheet GL accounts, and you give the range here, and then it takes you through the various steps and makes the settings so that you end up with complete asset classes assigned to these GL accounts. Quite useful. Okay, here you can specify what required entries you want in your asset master. So in other words, when you're creating a new asset, you have an option to decide what fields are mandatory and what are not. So here we have screen layouts, and as you can see, you have multiple screen layouts because you don't necessarily want the same layout for every type of asset, because some fields will be relevant to certain types of assets, some won't. So you can create layouts. So here, let's say we take real estate here, and then within that, we go to the field groups. And anybody familiar with the asset master will probably recognize these headings. These can be set as tabs in the asset master. So you have general data, for instance, and then you set the rules for the general data tab in the asset master. Okay, so you have descriptions, you have long text, you have measure, quantity, etc., required, optional, not to be shown, and then where it's maintained at the this one here is for display. It doesn't apply to most, but it is for quantity display only. And then this is where you set at what level this is maintained. These settings are maintained. So here it's at class level, here it's the main number, and here it's the sub number. So that's where you set the screen layouts. we have define allowed entries for the user fields. These are fields that users can set values for themselves. Again, it's the same thing as before. You have 4-character evaluation groups. You can give those any value you want. 8-character, reason for investment. And this is an environmental protection indicator. These are user-defined fields. Okay, so here we have the asset classes. Now, all asset classes at the client level are available to all charts of depreciation. But you can create your own if you want to. So you can do that by going to copy as, or if you want to look at the values for that asset class, this is where you do it. Account determination, this is how you decide what GL accounts are going to be posted to in both the balance sheet and the P&L account, and so on, and various other settings here. Okay, then here we enter default values and asset classes. So we talk about default values for depreciation terms, net worth valuation, if we have insurance, leasing, if assets are leased, and the value for the user fields that we mentioned earlier, 4-character or 8-character. So we just entered default values here, and they're automatically entered into the asset masters of any assets created within these asset classes. You can override them, of course, but these provide you with default values, so it saves you the effort of having to fill them all out manually when you create an asset. Okay, here we can specify asset classes for creating asset from purchase order. This is a specific type of asset class. So you can automatically create the asset from a purchase order, so it integrates with purchasing rather than have to manually create the asset and then apply it when you receive the asset. You can automate it so that the purchase order actually generates the asset once the asset has been received against that purchase order. Not absolutely necessary to fill this one out, but some people might want to do it. Okay, now we assign GL accounts. Okay, so now we're in this chart of depreciation, which I entered earlier. It remembers the chart of depreciation. Before starting, you should set your chart of depreciation, and then it remembers for that session which chart of depreciation you're working with. So we're working with this chart of accounts associated with the company code that this chart of depreciation is attached to. And then within that, we have different types of accounts. We have the balance sheet, we have depreciation, and we have the special reserves. So for that chart of accounts, we go to account determination. These are basically rules for applying GL accounts. So if we just take this account determination here and look at what balance sheet accounts are set up for that. Okay, that's just a warning, doesn't mean anything. Okay, so for these depreciation areas, we have set up balance sheet accounts. For this chart of accounts and for this account determination rule. And if we just look at area 1, which is the main area, you can view the actual accounts within that area. So again, the list is quite long. As I said, in the full configuration tutorial, we'll be going through each one of these and explaining what each one is for, which ones are mandatory, how you set them, and what effect they have. Quite a lot involved. Next, we're going to look at specify intervals and posting rules. Okay, so we have our company codes down here. So let's pick one I've been using, just this one here. And we go to the posting rules. Okay, and we've set posting rules by depreciation area. again, you may remember these depreciation areas from before. We take the main one here and look at that. Okay, so normally we'll post depreciation on a monthly basis, but you can do it bi-monthly, quarterly, semi-annually, annually, or you can select as you go if you do it in expert mode here. And these are other settings that allow you to post interest revaluation, or allow the net book value to go below zero if you depreciate beyond the useful life. So those settings are made here. Okay, we'll go back out. Okay, now next step, we assign an input tax indicator for non-taxable acquisitions. So here we're referring to input tax such as VAT, and we need to set an indicator by company code where we acquire an asset that does not have VAT, where VAT doesn't apply. So we set an indicator that has a 0% value. Otherwise, we get errors because it expects to find a tax indicator. Okay, next one, we specify financial statement version for asset reports. Okay, again, we pick our company codes and we pick a financial statement version and just assign it there. Usually the default that you got when you copied over will be sufficient, but you can change it if you prefer. So that covers our basic settings for organizational structures. Next, we're going to look at special valuations. So here we are with special valuation. I should say at this stage that the documentation provided here is often quite useful. This area concerns itself with net worth tax, insurance valuations, investment support, i.e. grants, and leasing. So if we open this one here, we assign GL accounts. So we pick our chart of accounts again within that's associated with the chart of depreciation we're using. We go to our account determination. Again, we saw this earlier. We take this one here. I happen to know there are values entered here. And then we look at the special reserves. Okay. This area is reserved for the difference between the book valuation and the valuation for tax purposes. So if we look at the accounts that are set there. Okay, this is fully configured. This field here is no longer used, so there's no need to put a value in there. But here are the various GL accounts that we need to set. Okay. And then we talk about the net worth valuation. So we have property classification keys, property indicators, reasons for manual property valuation. These are just settings that you can set what you want here, depending on your particular circumstances. They're used in the transactions. Okay, insurance information, again, talk about types of insurance, the companies, the type of premium that we have, and we set these depending on what type of insurance we need. Again, with investment support, we specify investment measures. That's here. So we can have different types of government assistance, state assistance, and we set those here. They're called investment support measures within the chart of depreciation. We specify the depreciation areas for reduction. Okay, I think they're set here. Okay, we don't have any value there. Here we can see that the investment support can be managed on the asset side, i.e. a reduction of the overall value in the balance sheet, or it can be managed on the liability side, where the asset value is left as is, but there's a credit entry on the liability side for the amount of investment support received. So it depends on the accounting rules and the tax laws, etc., in your particular jurisdiction. Okay, now this stage we supply information on types of lease. This one just has one type set up, capital lease, depending on what type of lease arrangement you have. You give it a transaction type here, the document type for postings to the general ledger, tax indicator, posting key, and if you want a special GL indicator. And then again, we can enter default values for net worth, for leasing, for insurance, for individual asset classes. Some asset classes will not be leased, for instance, so it doesn't apply to them. Some will not have insurance data associated with them, and so forth. So that's our special valuation section completed. Next, we're going to look at asset data transfer, which refers to migrating data from perhaps a legacy system into SAP for asset accounting. So first we look at the company code status. This is a protection measure really to avoid problems with importing data we don't want to import. So we pick out our company code along here and we look at the various options available to us. Okay, so you'd set it to 0 if you've already transferred your data and you don't want to transfer any more. 1 if you're in the process of doing it, and 2 is test, as I have here, where you can keep on adding data, which is what you would do in a test environment prior to going live. And then you can have your company code deactivated, but that's not the case in this instance here. Okay, so that's that step. Let's go back out. Okay, now we specify parameters for the data transfer. Now, this step here, recalculation of accumulated depreciation. If we wish, we can have the system recalculate accumulated depreciation for the asset, the APC values that we transfer in. That's acquisition production cost, APC. I prefer not to do that actually, because I find it easier to transfer the accumulated depreciation as at the date of transfer into the database rather than having SAP recalculate it for us. That way we're sure of exactly what we're loading into the system. And we obviously match that up to our previous system, to our legacy system before we transfer, so that we don't have problems in the general ledger with a mismatch between asset balances in the old system versus the new system. Okay. Now, this one, the depreciation periods posted. This is to do with transferring mid-year. In an ideal situation, you would like to transfer on the first day of your year, so that you are transferring the previous year's closing balances and you don't have any transactions in the current year. But of course, that doesn't always happen. So you can transfer mid-year, so that you transfer the closing balances as at the end of the previous fiscal year, and then you also transfer in transactional data for the current year. And this is where you set the number of depreciation periods that you wish to post within the year. Obviously, you have to get your transactional data to match up with the number of periods that have been depreciated already in your legacy system. You do that here. Then you have to specify a transfer date, obviously. So you tell the system the takeover date, ideally at the end of a year, but not always possible. In one of my test company codes here, I did it at the 28th of February, just to make it a little bit more difficult. Okay, this you specify the transfer of net book value. Normally, you wouldn't do this, but for instance, if you've got, an asset of 10,000, it's halfway through its useful life, so there's depreciation of 5,000. The net book value is 5,000. So instead of transferring gross 10, accumulated depreciation 5, you can just transfer over the net book value amount. But then, of course, your depreciation is calculated in a different way in your SAP system than how it was done in the previous system, because in the previous system, you would have been applying a percentage, whatever it was, to the gross value of 10,000. But now in your new system, SAP doesn't know about the gross and the net and the accumulated depreciation. It only knows about the net amount. So any depreciation rates applicable in SAP will apply to the net book value, i.e. the $5,000 in my example. Usually it's not done this way, but you can do it if you want to. And then again, another calculation where you can, if you want to calculate, recalculate the insurable value based on the rules that you fed into the system, you can do that. But again, I would recommend transferring in the insurable values from your legacy system so that you can do your totals before you transfer the data. Make sure that all your balances match up with the balances in your legacy system, and then you're sure that the data in your SAP database is accurate. Okay, now here we have what's called the data transfer workbench for fixed assets, and you set up projects. Now this in fact links back to LSMW. So I prefer to do this part of the operation directly in LSMW, because all we're doing here is adding more complexity but not any more value. So it's easier to do it directly in LSMW. And there is a free tutorial on the website that covers an overview of LSMW. So please refer to that for this section. And then this transaction here is useful if you just want to create a small number of legacy assets, or if you want to make some adjustments, or you've left out an asset, for instance, you want to add it in here, or you want to change some of the values if you've made a mistake, or if you're transferring only a small amount of data, which is probably not going to be the case. So these create legacy asset change display and a sub number. Assets, as you know, have a main number and can have a sub number. So you can have multiple sub numbers within a main asset number, or not. And this is similar to how you would create an asset in the normal way. But the difference is that instead of just having master data and depreciation area data as you do in the normal AS01 transaction for creating assets, you have a tab here for takeover values. So you just enter the class, the company code. If there's a reference asset that you're copying from, you can do it here. And then you enter the individual values for the APC, the gross value, accumulated depreciation at the takeover date, and so on. So this is a manual way of doing it, basically. And that is basically it for asset data transfer. In the final of our 4 sections under Asset Accounting Lean Implementation, we look at preparing for production startup. And we have a number of operations here. In this one, we can reset company code, which means we can clear out any master data or transactional data that we've entered in this company code. So we're just left with the configuration, but no data. Enter the company code here. We can choose to leave the master data in place and only take out the line items by checking this box here. Then in this one, we do a similar operation, but this relates to depreciation postings. Again, give it a company code and clear out depreciation postings. Then in this transaction here, SAP runs through a checklist and highlights any areas that may be problematic, errors, or just warnings to double check on something. This one here, we can set or reset reconciliation accounts. Now, reconciliation accounts are the control accounts for asset accounting, and we'll just look at some here. So these are the GL accounts for land, etc., etc. And as you can see here, it's set as a reconciliation account for asset accounting, which means that we cannot post manually to it. But we will need to post manually into these accounts initially, because when you load asset accounting data in, it doesn't automatically post to the general ledger. So there are circumstances at the outset where you will want to post to these accounts, and you can make those accounts available for posting by setting it to blank here. We'll see that now in just a second. Okay, this is where we transfer the balances in. So we've transferred in the asset accounting data, master data and transactional data if we're doing it mid-year. Now we match up those values with the general ledger. So we post to the general ledger. So we decide on the document date, the posting date, what period, the company code, what document type we're going to use. So I'll just pick a, and what ledger group we're going to post into. I'm just going to put 0L for the main one. Return. Okay, so then we just have a posting document here. So we enter the transfer postings into the various accounts. So debit will be for the APC values, and obviously the accumulated depreciation will be entered as a credit. Obviously important that we double check that we're entering the correct balances here, that they match up with the balances showing under asset accounting for the data that we've loaded. And the final step is to activate the company code. Now remember, we saw this before, setting the status. We have it set to test here, but once we're happy that everything is loaded, everything is matched up, the GL looks right, the asset balances look right, we set it to 0. And that's it. So that completes our overview of asset accounting lean implementation. As mentioned earlier, there is a tutorial on full configuration of asset accounting, which takes you through all the settings and posting. So I'd encourage you to take a look at that on the website. Okay, thank you for listening, and good luck with asset accounting.